Hey guys, and welcome back to the ASX Investor channel, and welcome back to another ASX CEO interview. Today, we're very excited to be unpacking the vital metals story. ASX VML has recently become the first rare earths producer in Canada and only the second in North America. It's a fascinating company. It's a story, of course, that we know with the rare earths being such a critical material. There's been a lot of discussion about it. Today, we'll be unpacking it all. We're really excited to be joined by Geoff Atkins, the Managing Director of Vital Metals. Geoff, welcome to the channel.
Thanks for having me on.
There's so much for us to unpack, so much for us to discuss, but I think before exploring all the recent news flow, it'd be great just to have that overview on who is Vital Metals.
Yeah, so Vital Metals was, we started off as Cheetah Resources, and then Vital Metals took over Cheetah Resources back in 2019. And we're focused on guaranteeing a supply of raw materials, of rare earth raw materials into the diversified rare earth supply chain, and really focusing on that market outside of China. So what we are doing is the entire executive team has come out of Lynas, and the vision of Vital is to take all of those lessons that we've learned over the past 10 to 15 years and to apply it to successfully develop rare earth projects.
And just for that high level view to kick us off, it'd be interesting just to have that overview about rare earths. I've heard you previously speak about them as not a mining commodity, but as a specialist commodity that goes into technology products. What are they?
Yeah, so rare earths are basically, sometimes they're classified as the enablers of the fourth industrial revolution. So what that means is if you think about the great shifts in technology, which really drive the way that we live, the next one is all around energy efficiency, renewable energy, miniaturization. It goes into all of those sort of products. So you're looking at smartphones, you're looking at artificial intelligence, you're looking at robotization, all of those sort of things, as well as moving away from fossil fuels. Now, all of those technologies are reliant on rare earths. And that's really why you can say that rare earths are an enabler of that. Now, the difference between a commodity and a specialist product is a commodity is something which basically you dig up out of the ground, and there's not really, specifications don't really have too much of an impact on it. So you can sell it anywhere. So basically, a loaf of bread or something like that. And that's really where iron ore or copper, those base metals are the real commodities of the mining space. Rare earths are different because the specifications of the products that you sell have to be so particular and so specific for their individual uses. So that means that the production processes have to be very specifically designed and engineered and constructed to meet these specific requirements. So that's why it's more like it's a specialty product. It's more like it going into a chemical process than your normal base commodity.
And of course, when discussing the rare earths as well, we know that they're a material of strategic importance. Traditionally, of course, the bulk of the production had come out of China. We're seeing this focus on localization of supply chains at the moment. Did you want to speak about that and how Vital will look to feed into that?
Yeah, look, I think, and it's not just, it's not an anti-China thing either. It's purely the fact that for every commodity, and I think companies are starting to recognize that you can't rely on a single source for all of your products. Now, that's whether it is out of China or you've seen previously with cobalt out of Africa. So companies are starting to look for alternate supply chains and to diversify their supply chains. And I think the other thing is, if you look at what's happened in the world in the last 18 months to 2 years, it shows that you never can, you have to plan for contingencies and look at alternate sources because you don't know when a particular source is going to be shut down. And what we're seeing with rare earths is that because the supply chain has been so dominated by China, we're now seeing that, okay, that's actually a risk when you consider how important these products are for everything which we do moving forward and all of those processes, whether it be defense, whether it be telecommunications, all of those types of things. And even from if you're a manufacturer of a car, if you're looking at planning your supply chain and your for the next 5 to 7 years of the life cycle of an electric vehicle, you need to know that where you're going to get all those products from. So this is where we're starting to see a bit of a shift in terms of trying, instead of working on that just-in-time philosophy of, okay, it's okay, we'll be able to get it, to suddenly realizing actually there are things that can happen which can impact your supply chain. So therefore you need to plan for contingencies and diversify that supply chain.
And that, of course, leads us to the flagship Nechalacho project, looking to feed into that US supply chain. You've got quite an interesting model of bringing it online initially with the North T zone that's just come online, that lower capex coming online, and then ramping up into the Tardiff zone. Did you want to speak about that process and the roadmap up ahead?
Yeah, so look, a way that we sort of look at developing the Rare Earth project is, this might sound crazy, but before you can actually produce anything of scale, you have to first get into production. And the first step is actually getting into production. And yeah, it's a little bit like when you're building a house, where the first thing you have to do is build the foundations of the house. And that's really what, for us, the North T project is. That's about saying, okay, we need to be able to demonstrate to our customers, to the market, to the end users, that we are a reliable source of rare earths. There's no point us saying, going day one, going to a car manufacturer and saying, we're going to supply all of your rare earths. We've never produced anything in our life before, or in that company, but trust us, we'll be able to do it. So we need to be able to show that we can produce rare earths and produce it at specification. So that's what North T is all about. After that, and once you build those foundations, then you produce the scale. And the scale then comes down to Tardiff, which is the second zone at Nechalacho. And we build that scale of the project. And everything, all the work we're doing now is starting to bring Tardiff forward. And then the final piece of that puzzle, of course, is making sure that you have all the products that you need. And that's where our recent announcement about the Kapoa project comes in, because Kapoa is a heavy rare earth project. Nechalacho it does have heavies, but it is predominantly light. So what's also important is, if we're going to our customers and the end users, and if you look at electric vehicles and the magnets used in electric vehicles, they require, it's only a small amount, but they do require heavy rare earths. So you want to be able to go to those customers and say, we can supply you with all of your products. You want to be a one-stop shop. And with currently all heavy rare earths coming out of, or being processed in China, or being separated in China, even if we supply 98% of the rare earths to the automotive industry from our side, if they still rely on heavy rare earths out of China, it's not a diversified supply chain. So we need to make sure, so the whole point of that third phase is actually making sure that we are able to supply the complete suite of products. And so that our customers can come to us and say, okay, we can get everything we need from you. And that gives the certainty to those end users.
For the viewers who might not be familiar with it, I know that instantly when people think about rare earths straight away, it's NdPr, two of the light rare earths, but it'd be great for you to just break down kind of the difference between the light and the heavies, maybe some of the end use cases, and then of course what these recent acquisition stakes mean for the journey up ahead.
Yeah, so I mean, I like to simplify the rare earth space in terms of the end users really, because it is driven by magnets, and that's the way to really think about it. It's driven by magnets. So, and that's your neodymium iron boron magnet, which is really what's used in electric vehicles, wind turbines. But more importantly, because they are so strong, every time you look at anything which is to be miniaturized, whether it come from like AirPods or anything like that, which need to get power from a very small mass, you need the rare earth magnets for that. Now, the strength of the magnets comes predominantly from the lights, which is the neodymium and praseodymium. However, in certain applications, and this is particularly true in electric vehicles or high-speed applications, where you start to get elevated temperatures, with magnets, as temperatures increase, the magnetism drops and the strength of the magnetism drops. So where the heavies come in, and this is specifically terbium and dysprosium, is that they increase the resistance to high temperatures and increase the level of performance at those higher temperatures. And that's why you need those small amounts of heavy rare earths in those applications. You don't need them in all magnet applications, but there are certain applications where you do need them.
Fascinating to hear that. And so then I guess building on that, we of course hear about these huge variety of end use cases from wind turbines to the EVs to the consumer products. To help conceptualize it for the viewers, can you elaborate on where they may end up?
Well, basically they're used in everything in everyday life. If you look at what I've got on my desk here at the moment, I've got a computer, I've got a smartphone, I've got AirPods, I've got screens, I've got a phone. It's used everywhere. So anything involving, is what I was saying at the start, around when you start thinking about this fourth industrial revolution, where all of those new technologies rely on rare earths. Fiber optic cables for computing, fast high-speed internet, lights, you name it, it requires rare earths. And there's new uses coming out every day. So it's a fascinating area, and I think the possibilities are enormous.
And so coming out of Nechalacho, then you've got that first offtake with Retech. Can you speak about that commercial front and any other further discussions or how you'll be heading from?
Yeah, so obviously for us, we've signed the agreement with Retech. So Retech are a Norwegian company, and they've been working on their plant for many, many years. I mean, I first met them in 2008, I think, and took them up to Mount Weld when I was at Lynas in 2009. So they have a lot of experience and expertise in rare earths, and that for me was a critical thing in terms of selecting that first customer. And so Retech's plant is, they're going through the development phase of that, and that's for 1,000 ton, starting at 1,000 ton a year of rare earths, but that's excluding cerium. So cerium makes up about 50%, so it's equivalent to a 2,000 ton TREO basis. Now, the nature of that agreement is that each group gets a guaranteed minimum price, which basically covers our operating costs, and then we share the profit. So it really is, I look at it, it's almost an integrated supply chain with two different companies. And we're working very collaborative on that process to ensure that we minimize overall operating costs and to maximize the overall profit. So we really do work on that win-win scenario. So it's a really good relationship that we have with them.
And you touched on it there. You've got a long experience with Retech personally, but of course yourself, as well as many of the other leadership team, have come from Lynas, as mentioned. Would you talk about some of those lessons learned and some of what that experience means for the journey up ahead for VML?
Look, the main thing is it's really led to the understanding of what can go wrong when you are building and commissioning a rare earth plant, and also how difficult it is to achieve a product at specification. Now, what typically happens, and this is why we've come to the approach which we have, which is starting small and really minimizing capital and bringing the operation in online as soon as possible. Because if you build a big plant and you have a $200, $300, $400 million plant, which you're building on day one, it's going to take you a long time to actually build the plant and commission it. And because you will always have problems commissioning it. And then because it is a specialty product, and it's not like iron ore, it's not like copper where it just goes into a blast furnace or something like that. This goes into a highly specialized chemical process. So the customers who you sell to, they will take months and months and months confirming that that product actually works and it meets the requirements of their process. Now, we could be talking about 1 part per million of a specific impurity which wasn't considered, which will completely screw up their process. So that process takes a long time. Now, if you've spent hundreds of millions of dollars on a plant, you're carrying a lot of capital and a lot of working capital before you actually get any money, but particularly get enough money to cover your costs. So one of the big lessons we've learned is to say, okay, you have to minimize that capital, and you minimize the time frame in which you've spent it. And what that does is it reduces the risk. So even if it still takes you 6 months, 9 months before you start generating that cash flow, it's a big difference carrying a $20 million cost on your balance sheet to a $200 million cost. and the risk that has to your shareholders is significantly less. The other thing that occurs is the more money you spend, the sensitivity of your project to every single percent of recovery or cost or things like that, they increase exponentially as the cost of your plant goes up. So by reducing the cost of the initial plant, what it does is it reduces that sensitivity during those critical early phases, which once again reduces risk. So that's really what we've learned from the time at Lynas, and then some of the other guys also then left from Lynas and went to Northern Minerals as well. It's identifying how to reduce the risks of establishing a rare earth plant.
And then with that implementation, you did raise $40 million earlier this year, which is helping you bring on the North T-Zone now. Did you want to talk about that pathway forward from there now?
Yes, so that money which we raised, that goes into, obviously we've mining operations are underway. We have installed our ore sorter up on site. That is operating at the moment. We're now in the process of building our plant at Saskatoon, and then that money will then also go, so that money will be used to fund that plant and then the commissioning and operation of that plant.
And I've got to ask you as well, as MD, how much time do you spend looking at the share price? Of course, it's been a whirlwind past year and a half for Vital Metals. How much time do you spend paying attention to it, and any reflection?
Look, it's a tough one, because you have to be aware of the share price, but at the same time, as the MD, you need to look at the long-term growth, and it's more about long-term trends. So that's really where the focus lies. It's very difficult, and you can't really afford to be caught up on the day-to-day volatility. You have to be aware of it because your shareholders care about it. And so as the MD, you don't care about the share price, well, you're not doing a very good job. But at the same time, it's that balancing act between short-term and long-term.
And so I guess then thinking about that longer term vision, if we're putting our eyes forward, maybe 12 months forward and then 5 years ahead, where will ASX VML be on both of those times?
Look, I think the rare earths, because they are such a strategic resource, the long term I think is really interesting, and there's a lot of potential there in the long term. And I don't think anybody can really predict where that's going to be. The growth in the electric vehicle market is growing so much on a year-on-year basis, and we are reaching that inflection point where that annual growth is now becoming significant enough, which leads to significant potential shortfalls in supply. So that's a difficult one. The short term for us is really about positioning ourselves to take advantage of the opportunities which may arise in the long term. So over that next 12 months, it really is about us positioning ourselves for that. And that means that we're a demonstrated and reputable producer of rare earths. We have a large-scale project ready to go. We have that growth profile of product coming through. And we also have the ability to be able to react to the market. Because I think that's the other thing which is very important when you look at a market like the rare earths is at the moment, which has that huge potential for change. And it's another reason for taking the approach that we have of this smaller scale to start with and being modular. There's no point saying, great, rare earth market's going gangbusters. We're going to now flick the switch on a project which is going to take 5 years to build, commission, and get into operations. You need to be able to react on a year-by-year basis, whether that's to increase, to decrease. And so what we're doing is looking at making sure that we're established and we have those foundations in place so that we can react to the market and we can take advantage of those opportunities which present themselves.
And you touched on it earlier before, but would love to hear about that integration plan for those 2 new heavy projects that you've recently acquired, and what's the plan moving forward for those?
Yeah, so look, for us, it's really now about defining what those projects might look like. So specifically with Kapoa, that's previously undertaken. It has a full feasibility study which has been completed on it. And that's one thing which attracted us to that project, is there's a lot of work which has been done on that. But That was completed in 2013. So over the last 8 years, there have been significant developments there. So we'll go through that and we'll define how we want to develop that project. And that's really going to be the next, I would expect, six to 12 months on that process. And then it will be finalising what that feasibility study is before we proceed. So that will be a couple of years away before we really get into and accelerate that. The focus really for us is we get North T into production, and then it's Tardiff. And it's really about, in this next 6 to 12 months, defining the Tardiff project and being able to say with certainty, this is what scale we want to start that up, and this is what that project is going to look like. This is how we're going to fund it and go through the whole thing. Now, our plans are always, and we've always been very clear that the approach is that you start up North T and then you use that capital or the revenue from that to then fund those future opportunities.
And of course, the Tardiff zone in itself is a significant resource, a generational resource I've heard you refer to, but would love to hear just an update as well on Wigoo Hill and how that's progressing over the horizon.
Yeah, look, well, Tardiff it's a massive deposit. We've got over 1 million tonnes worth of contained rare earths there. So, we're not going to run out of that. That's 20, 30, 40, 50 years. Wigoo Hill, discussions there are just continuing with the Tanzanian government. We're working away there on the mining license. There's not a lot to report on that one at the moment. Our focus really is on Nechalacho and Kapara and the Canadian projects. But Wigoo Hill is certainly still very much in our plans. That provides that second. We see that providing that second project of scale.
For those longer term shareholders who have been following ASX VML, or for those prospective shareholders who might be interested in that rare earth space, did you have any final reflections or thoughts you wanted to share with them, Geoff?
Look, I think the main thing, I would hope that shareholders would have a look at what we said that we would, like 12 months ago when or 12 to 18 months ago when Vital took over Cheetah and we started this rare earths journey. We set out the plan of what we wanted to achieve. I would hope that we've been able to achieve those, and we've been able to tick each of those boxes as we've gone along. And to get into operation within 18 months of finalising an acquisition of an asset. I mean, I'm incredibly proud of the team with what they've done to achieve that, specifically in a pandemic where a lot of it's had to be done remotely. The guys have done it. I think the guys have done an amazing job on that. And I'd hope that gives confidence for the shareholders that what we're now saying we're going to achieve over the coming years, that we're going to achieve those. They're not just hollow dreams. We've always prided ourselves on on delivering what we've said we would. And I think that what we've been able to achieve over the last 12 to 18 months during the pandemic, I would hope gives the shareholders a lot of confidence in our ability to deliver the next 12, 24 months.
Geoff Atkins, it's been an incredibly busy period for Vital Metals, but it looks like this is only just the start of the long journey ahead. We'll be excited to see where it heads.
Yep, I'm certainly excited to see where it goes, and just looking forward to continuing the journey.
Thank you so much for joining us, mate. Really appreciate your time.
No problem at all. Really appreciate it.
That was an absolute pleasure of a conversation. It was fascinating to unpack the rare earths opportunity and the ASX VML growth journey up ahead. A big thank you to Geoff for joining us on the channel. We'd love to know your thoughts as well, so drop in a comment below what you think about Vital Metals and where do you think ASX VML heads from here moving forward. If you did enjoy the video, don't forget to give it a thumbs up. Feel free to share it out as well. This past period we've interviewed a range of different ASX CEOs, so we'll leave links to those up above that you can check out after this one. We're the ASX Investor channel and we make daily videos talking about the stock market, investing, and we find and analyze the best growth stocks. So if you haven't yet, hit that subscribe button. Make sure you've got your bell notifications turned on as well, so you won't miss a daily episode, and we'd love to have you join the community. The Vital Metals story is a fascinating one. They're moving into production as the first Canadian rare earths producer. They've got a long growth runway up ahead. Thank you so much for joining us. For now, stay well and happy investing.